the Emkay Global Financial Services, who joins us on the show. Nirav, good afternoon. Thanks so much for joining in. Nirav, it does seem like Donald Trump will take over the presidency this upcoming week. Based on that, do you think there could, firstly, be a little bit of a pause on the fall in the rupee that we've seen? And what are the implications here on going forward for the Indian markets? What's your reading here?
So, we need to appreciate the fact that a stronger dollar is not necessarily only a Trump trade. Obviously, Trump accelerates the trend. The key takeaway essentially is US is firing. It's a brilliant economy. I'm completely in awe of that. In terms of what they've done, you've gone from a hard landing to soft landing to no landing. And this is against the rest of the world. So what Trump does essentially is that it sort of reignites the animal spirits, which means that your forward-looking data will be far better than what you've seen historically, and which is what to me explains what Fed has done. But if I have to answer your question in a nutshell, you are going to look at a very, very strong dollar environment over the next 6 months. Which means that it's going to be an issue for rupee and all other emerging currencies or even developed market economies. That's a fact.
Okay, Nirav, Harsh also joining in. I want to try and understand currency at this point, your views. You believe the dollar index move is overdone? Have we overbuilt the entire Trump trade into the dollar index where the currency is concerned?
So my sense is that, we've seen a good rally. Maybe it will pause, but I will not call out a top right now. Like I said, I believe that, when Trump coming back to power and with the control of both the houses is essentially something like when PM Modi came back with a majority which was not expected in 2014. That creates its own business momentum. I'm not even talking about the stock market momentum. And that means that, you'll have a strong dollar environment. Now, can it rally another 1 or 2%? It can probably rally. The only thing that can cap this now is the fact that even the bond yields are rising. So you've now got a stage where in US, you've got bond yields which are now probably ahead of the nominal GDP growth rate. So that is an offsetting factor. So you've got very, very strong growth, and then you've got bond yields which are rising, which tends to offset that higher growth rate, which means that you'll probably be in a neutral situation. But to me, rather than trying to predict the quantum of the move, I think if we get the direction right, then half the job is done, and then you keep on evaluating the new data points that come in. You brace yourself for a strong dollar for the next 3-6 months is what I would call out.
All right. So, Nirav, based on the note that we've had from you in the recent one, you remain super bullish on PTM. Even if you are not at the liberty of talking about just that one stock, if you could just give us an idea about what the current environment is for companies like this.
Well, this is obviously with the benefit of hindsight. I wish that, I had a better understanding of the graph of the business model maybe a year back, which was certainly not the case. To me, more for any of these companies, and I call them as digital-only companies, which means that don't have any physical infrastructure, whether it could be a Zomato or a Zepto or a Paytm or many of the fintechs. Once you build a critical mass of your MTUs or monthly transacting users, it is very, very difficult for you to win them off. That becomes your competitive mode. And it's only on these platforms that you can give super efficient deliveries, right? I'll not go into too much of detail, but you can't think of a case study in a physical world where you can give out a loan which is, let's say, $6,000 and make an ROE of 2%. Paytm can, right? You cannot envisage a situation that, you can underwrite an insurance of just about $1,000 and make money. On a fintech platform, you can. So to me, you cannot think of a financial inclusion in a country like India devoid of a platform. So please appreciate that, and I'm just trying to give a context of how big the trend is, right? So It's only in India that you got super low cost bandwidth. Yeah, it's only in India that you got phenomenal low cost of last mile delivery. Because you would expect a bunch of this company to come and sit in Nifty. We are not talking about some small cap, mid cap idea which is underpriced. These are very, very big things.
Right. And so you've spoken about the differentiator there. When it comes to monthly transacting users, stickiness of the business, right? You spoke about that. I'll shift and try and focus in on power. In power, there are various themes, and again, it's a decadal theme, power, likely to play out, and various ways to play the theme. How best do you suggest we play it, and do you still believe that the numbers with regard to expectations is not overdone? Up to 2030, various kinds of numbers being thrown around, both in renewables as well as in thermal, but overall in power.
Right. So see, I'll not underplay the element of risk when you make any projections, right? But I still believe that you could have a bit of cyclical ups and downs. Maybe you could go a bit wrong in terms of the pace of the adoption, right? But I don't think that there'll be a reversal of the trend. Just economically, right? It's such a forceful stuff that today the discovered cost of only solar is 2 rupees and 40 paisa, and you got thermal which is roughly about 6 and 50 paisa. And if I talk of solar plus battery hybrid, it is about $7.5. So these prices are trending down, and then the markets just take off. So there's a very, very strong economic rationale. It's just like EVs, right? You may just say that, okay, slow down by a year or two, maybe the regulation is not in favor. I would certainly go out and make a very, very strong case that in the next 10 years, anywhere around 50 to 50% of the fleet will be EVs only worldwide. It is a no-brainer. It has to happen. You can be off by a few percentages. The trend is not deniable for sure. Power in a country like India, and most importantly, what makes you bullish on the power is that your supplies cannot come overnight, right? If it takes 4.5 years for you to set up a plant, it will take 4.5 years. Probably will take more because you got a lot more concerns about environment. And it's not only India, right? So transformers, for example, the cost of making a transformer in India on a rupees per megawatt basis is probably 1/3 of what is there in US and in Europe. So the export market is a big addressable opportunity. The grids globally are in a bad shape. They have not changed for 40 years. You need renewables. When you want to plug in the renewables in the grid, it needs it has to be redone. So there are multiple demand factors. There is only so much of supply. And those are the things that you want to look at. And, right from owning some of the power assets to the entire supply chain, it could be transformers, rectifiers, the financiers, there's a whole opportunity. And I consider that the valuation in some of the cases could be ahead of the story. But so is the growth rate. And it could be owning, people are trying to set up solar cells and stuff like that, because you also have to take a view on regulation. So there are multiple factors, but we like the theme.
Okay. And sir, my last point is with regard to domestic facing, where consumer is concerned. Do you expect some bit of recovery in these consumer facing names, and what pocket would you target if you were to pick one?
So you may want to rephrase the question, right? In a sense that, are consumer spending? Of course, they are spending. So if you look at consumer discretion, for example, if you look at consumer durables, they're spending, right? When you're talking about TVs and refrigerators and washing machine and ACs are going to the roof, right? And then if you look at consumer staples, they'll come and say that, okay, my rural markets are not growing. My rural markets are sort of picking up. My urban markets are not growing. So, I would not call out that, there is a weak consumer demand. I think there are competitive risks that I think the markets are not appreciating. So if Blinkit is growing at 100% YOY, Zepto is growing at 150% YOY, they're taking a share away, right? And I would not be exactly sure, but it is quite likely that a lot of these consumer staple branded companies, their share of the quick commerce would be lower than their share of the market share that they got within the traditional kirana or the retail stores. So that is getting disrupted, right? Like I presume that someone like organized retail, it could be DMart, it could be Reliance Retail. Look at the GMVs of these quick commerce companies, right? You are talking about, I just read today the GMV of Zepto is $3 million on a running rate. These are big numbers which have been created in 2 years, and DMart has been there for 20 years, right? So that is competition. So you may want to segregate where the slowdown is because you are losing share to your competitors, and slowdown which is generic and that is driven by macro factors. I don't think macro factors are really playing a role over here.
Okay. Thank you so much, Nirav Sheth, for coming in, speaking with us, giving us all of those views. It's always a pleasure speaking with you and getting that perspective.
Thank you. I appreciate it.